how do you trade the markets given all of this concern that's out there right now about speculation and speculative trades?
First of all, I think this type of activity is obviously quite limited in Asia so far. So we are a little bit more insulated from that respect. But we've been flagging to investors, right, coming into this year. When we spoke about this last December, we were talking about 10 to 15% upside remaining in this market based on valuations and fundamentals. And we basically saw that in the first 3 weeks of January. So from here, it is going to be a little bit volatile. Risk reward is extremely poor if you look at positioning, if you look at valuation, sentiment is toppy. Even macro conditions are looking a little bit too full in the near term. In these conditions, if momentum slightly weakens for any sort of reason, that can lead to a pullback in markets. And that is exactly what we're seeing right now. We do think that this period of volatility will pass, though. And as we get closer into March and April, I think we will start to see this bull market reassert itself. If you think about the main conditions underpinning our positive view on equities overall, the fact that we are going to see a macro recovery, which will be pretty strong in 2021, the fact that policymakers, both on the fiscal side and on the monetary side, remain fully committed to this recovery, and the fact that we've seen equity market positioning globally and in this region at a relatively low level when you look at more longer term indicators, though, like I said, in the short term, we have seen these indicators move up quite rapidly.
All right, how do you position to take advantage then of that scenario that you just described?
Right. So if you look at the valuations, dispersion within the market, there is a very, very wide gap between what are very expensive growth and momentum stocks and a very inexpensive value stocks and cyclicals. So our call last week was to downgrade growth. We've been overweight growth as our core holding in this region for the past 2 years, and that's worked out very well. But we basically downgraded growth simply because the valuations just don't make sense anymore, and the fact that cycle positions are starting to turn more unfavorable for growth. And with what we've seen in terms of policy, the shift in the policy-making narrative, we do think that a structural environment for value stocks will open up. And as a result, what we recommend to investors is to gradually start moving away from their growth stocks, which pretty much everybody owns, and slowly start to allocate into more of the value and cyclical part of the market.